Hey guys, Jack here. Stick around after today's episode to hear how new clients can save 50% on AgYield's full suite of consulting and technology for 2025. This exclusive offer is available now until April 1st. Don't miss out. Terms and conditions apply. Check out the video description to learn more. Well, hello, good morning, and welcome everyone to the War Room. It is Tuesday, March 4th, a nice gloomy day here on the west side of Chicago. I am, of course, AgYield Marketing Manager and everyone's favorite backup host, Jack Coakley, filling in for Dan yet again. Happy to be back. As always, feel free to join the discussion. Go ahead and post a comment anywhere you see fit on whatever platform you're watching us on, and you can always reach out to us at info@agyield.com. With that, let's shoot it over to Brian with the overnight numbers.
Good morning, Jack. Thank you. Overnight, lower, highly traded volumes overnight. May corn down 7 3/4 at 448.5. May beans at 998.25, down 13.25. And May wheat, 538.5, down 9.25. In USDA export sales, we saw 130,000 metric tons of white wheat going to South Korea for 24-25, and 20,000 metric tons of soy oil to unknown for 24 and 25.
Thanks for that, Brian. Well, lots to discuss today, guys. Let's start with Dustin, and we'll work it around the room.
Yeah, obviously, lower markets again overnight. This after, kind of a week, last, 5-6 days. Trade tariffs, we're in a liquidating market. So the retaliatory tariffs from China and Canada are certainly the main thing that's pushing us lower overnight. The interesting thing, though, just kind of reading a lot of the commentaries, is that the Chinese tariffs, for example, were a bit relaxed for what they could be. There's, I think the quote was, they haven't really flipped the table yet, which could be a good sign. Everyone's trying to kind of read between the lines of what that means. And, obviously, I think that they were open to negotiation before. So we have to be, kind of steadfast to see how quickly this evolves. It could get way worse than this, or it actually could, show some signs of improvement if there's at least some willingness to go to the negotiating table to avoid, an expansion of this trade war. But either way, they have retaliated with some reciprocal tariffs in certain categories. Canada as well. Have not heard yet from Mexico. But of course, the emotional reaction overnight is certainly negative. Seeing this news, that was kind of pre-discussed, though.
Certainly. Dustin, just because I'm interested, and based on kind of pure speculation, what does a full flipped table potentially look like from China?
Like if they just say we're going to go to a 30% import tariff on all U.S. products, some sort of escalation, picking and choosing, right? Choosing to do a 10% tariff on soy products and a larger tariff on corn products, right? That's a bit more calculated. It's not really a sign that someone doesn't want a resolution to this, right? Or an entity like China. It's more of a, hey, we're going to slow play this a little bit more relaxed and not just an emotional response. So they've had time. Right? One thing we keep coming back to, and I don't want to be overly rosy about the potential outcomes or completely negative, right? Because this situation is evolving by the hour. But we have to remember that they have negotiated before, right? We had a phase 1 trade deal. Of course, it was after 2 years of, the first tariffs on China, and they kind of have a playbook at this point. They've had since Trump really started leading in the polls to start thinking about this. It's not that he campaigned on this idea. So this is not a new thing that just is sprung on them. You better bet that there's a strategy on both sides, and there's an open communication channel too.
Yeah, no, thank you for that. That's a really good insight. Justin, anything to add?
Yeah, I echo a lot of Dustin's comments. It is a liquidating market. Obviously, we came from, or coming from large fund positions. As the funds liquidate, and these players are bigger than our markets are used to, when to accommodate such big shifts in position sizes in a short amount of time. So as that happens, you start running through moving averages and technical levels, and you trigger more selling, and it's kind of a self-fulfilling prophecy. We've seen, several moves like this over the years. This is one of the worst in a while. So you just you start getting on margin calls, you start forcing people out of positions. So I think, we're getting to levels. My personal take here is you look at, D's corn where we were last night, 447, 1003 beans. You're at that 95% level on crop insurance. If you look at, PLC kicks in at another 20 cents lower. So you're starting to get into huge payments below these areas, and you haven't planted an acre yet. Crop insurance is already set. So I just don't see a big or really any incentive at all for farmers to be selling when you can buy crop insurance at these levels and have another level of protection with the farm bill payments. So I think it's probably getting overcooked here to the downside. Doesn't mean it can't go further. Obviously, if the funds want to sell another 100,000 contracts of corn or beans, it'll go lower. But as far as a value area, I think we're well into that. Personally, spreads have liquidated a ton. July D's corn went from a 45-cent inverse now to 8 or so cents. The March is now back at a carry to the December by 15, 16 cents. So we've taken a lot of premium, a lot of both price and spread premium out. I do think, that March 1st date as it came, farmers had to also sell. So everything kind of hit at once to raise money to pay rent checks and talk to their bankers. And of course, there weren't a lot of selling at $5, but then all of a sudden the calendar came around and it happened to be at the same time as the sell off. So I do think a lot of things hit at the same time. Volumes are really big down here. I do think some of these commodities like soybean oil, for example, we sold another 20,000. We have way over what the government's estimating for exports. And actually tariffs with Canada would be really friendly soybean oil. So I think everything's kind of liquidating right now. Some of these commodities are going to find a bottom before the others. Soybean oil might be one of them. We're selling oil. We're not really supposed to be selling that much more. And if we start tariffing canola oil and other competitive feedstocks into the U.S. for biodiesel and other things, that's really going to tighten up that balance sheet. So it, like to Dustin's point, I mean, we've talked about this for weeks now. The volatility, it's going to be here, and we're going to see moves bigger than we're used to. So now I think we've created a ton of air in the market. Meaning above the market. We've traded these levels now for between here and 50 cents higher. So you could have a lot of whipsaw action in this kind of price range. If we kind of find out, where a really good value area here is in these markets, won't surprise me to see, big 20, 30, 40 cent rips higher and breaks lower and kind of chop people up in this range until we know more.
Certainly. Jason, anything from your desk? Any thoughts, as the week continues on?
No, I agree with everything Dustin and Justin said. Right, it's a liquidation market. It's pretty obvious, right? We're just straight down, going right into these tariff talks. Outside markets too. I've said, right, the equity markets have been trading very nervously recently. I think a lot of fears of recession, right? So I think Justin's point, a lot of money swishing around, and our markets are a lot smaller than these equity markets, right? So when money, you had funds really long, with a perceived strong economy, right? And you saw Bitcoin really high and equities really high, and all these things were kind of cooking, and then everything kind of turned at once, or at least the fear index is sharp, spiked sharply higher. So I agree we'll probably overdo it here. Is it today? Is it, it's hard to say what that price is when we overdo it. But yeah, and I agree, right? You look at new crop corn, new crop beans. I mean, we're at levels that you have almost no incentive for a farmer to do any marketing at these levels. We're below these levels. So it is kind of a liquidation, sell to some point until that dries up. Yeah. So, if you got, we say this, the cliche, sharpen your pencil. We've been saying this for a while, but it is true. You really got to step back and say, the volatility's here. You can have these really big moves. And what are you going to do when you have them? I think the worst thing you can do is not do anything and then panic when it breaks really hard and then panic when it rallies. And that's where you can get really screwed up, just the emotional decision making, right? So you got to have a cooler head and really look at what you're trying to accomplish throughout the year. And it's early, man. We could, we haven't even planted a crop. We don't have acre numbers. There's so much unknown. We're just trading these headlines. So yeah, that's just kind of try to have a cooler head and have a plan and execute. So.
Well, just to add to that too, a lot of the headlines, there's obviously a lot of fear mongering going out there too, but a lot of the headlines are that the markets are collapsing, and obviously we're seeing the brunt of it in ags. If you look at the stock market, we're back to where we were in January or November. I mean, you realize how much money has been pumped into these markets really since COVID. Right. And I think there's just so much change happening right now that it's just got everybody uneasy, because we haven't seen something like this really. There's so many changes that are happening between tariffs and Doge and policy changes and new cabinet members. And, I think it's just a lot to process for anybody. So trying to outguess it, I think, is close to impossible on what happens here. The only thing you can look at, kind of just, restating what we're saying in other words, is you kind of got to look at the tools and the things that you're able to do, and then make the best decision you can. So,
yep, certainly. I appreciate that, guys. Brian, did you have something before we wrapped up for today?
Yeah, I just had more of a question for Justin or Dustin or Jason. Just, Justin, you brought up Farm Bill, that floor comes in at 426 for PLC. I mean, you have until April 15 to decide Farm Bill. If we continue to get weakness into the market, ARC's the band coverage, then you got PLC's price loss coverage. Would that switch? Or is that all based on location?
Yeah, I mean, like, I can just talk personally, and we were just doing this exercise on our farm as we're kind of picking our crop insurance, kind of getting those things set. Yeah, it's nice actually having that extended period to pick the Farm Bill. So let's say we just collapse. Let's say the funds get super short and we're at $4 new crop corn going into that. I mean, 100% would pick PLC. You have a price floor on all your production up to your, caps limitation. So, I think that gives you optionality. I think you can get really strong crop insurance policies here, and you're at let's call it floor number one here, that you can do today. And then you have some optionality and see how things play out. If we go sharply lower, PLC is going to be the winner, in my opinion. If we have a sharp rally, you'll probably, switch to Arc County. Now, obviously, you have to make some decisions there if you're going to, do SEO or some of those other things. But that's relatively small compared to that decision. I think this is where you just have to really keep in mind of, okay, if we're in this level, these are the kind of things I'm going to do. If we go back up to this level, so that's our game plan. Right now we're leaning PLC for corn, which I know a lot of people are out there saying Arc County is a no-brainer. Well, it is if you know the range of corn and the outcomes of what the market's going to do, I guess. And you just kind of have to be open-minded to that. If we do rally high enough going into April, you have a good chance of doing Arc County, and then you can do some things on the board that replace PLC. So you just have to, just kind of goes to knowing your tools and how they work, and not being lazy on this, in my opinion.
Yeah, and I want to expand on that a little bit, because I think a lot of people will choose Arc County for a good reason. Their PLC yields are quite low, right? Like, that's a history from 2018 and 2014. Arc County yields have trended higher, so your total dollars of coverage will probably be higher for, average yields down to the more reasonable price points. So everyone's kind of looking at Arc County as just a better probable payment and potentially more payments because that county yield has been rising. It really depends on the insurance policy you're buying, though, because let's just say if you're someone that had been planning on 80% all the way in Arc County, the difference of buying 80 SCO in Arc County and PLC could be a big difference in the end, because you're kind of replacing that county yield coverage in an insurance product that you pay for. But to Justin's point, the lower it goes, let's say it goes down to 350 corn for a marketing year average and for an October average, you're getting potential SEO coverage in that zone and unhindered PLC payments at that point too. So we're definitely looking at that as a sorry, Marcus just opened here. We're looking at that in kind of in terms of like what you can and cannot do to set the floors and get basically a clawback of the of where that spring price was established through a crop insurance policy. So anyone out there that's really kind of unsure about it, that's our customer base. Of course, we'll still talk to them about it at this point. But to Justin's point, we do have the extension of that decision all the way through April. But we have to kind of decide. A big portion of that decision comes into the crop insurance, which March 15th is coming up very soon. So
yeah, certainly. And now is a good time as ever to say, give us a call or reach out. And, we're more than happy to have those conversations. I'll even plug really quickly. You'll hear about it in the outro. We're doing an awesome promotion till April 1st, 50% off for all new AgYield clients. We did just come into the open. Brian, do you want to rattle off those numbers for me?
Yeah, sure, Jack. May corn currently at 447, down 9 1/4. May beans at 994.5, down 17, and May wheat at 535.5, down 12 1/4. So the weakness continues as we open here today.
Sounds like a plan. Hey, if you like the show as much as we like putting it on for everyone here, feel free to subscribe on YouTube. Helps us get our show out to a larger audience, and it helps us out with the algorithms and all that jazz. So we sincerely appreciate everyone who tunes in on a daily basis, and it helps us out in that regard. We're streaming live every day that the markets are open at 8:15 Central Time on X, Facebook, and YouTube. Again, appreciate you guys having me. It was a great conversation. We got to the open, which is always a pleasure, even without Ryland's help, who will yammer on about cows and hogs for 3 to 5 minutes at a time. We'll be back tomorrow with Dan and Ryland. So thanks again to everyone, and we'll see you soon.
At AgYield, we know that farmers are constantly confronted by new challenges, and 2025 is no exception. Markets are volatile, margins are shrinking, and lender confidence is in free fall. Farmers need industry support now more than ever, which is why we are offering something truly unprecedented. From now until April 1st, new AgYield clients can access our full suite of consulting services and cutting-edge technology at 50% off. This is more than a promotion. It's our way of extending a hand of support to farmers when they need it most. From precision grain marketing to innovative risk management strategies, we're committed to protecting your farm's profitability and building a stronger, more sustainable future. And together, we can weather the storm ahead. Visit us today at agyield.com or call 855-266-6241 to get started. Terms and conditions apply. Check out the video description to learn more.